A very good morning to you, my dear listener. Thank you so much for staying tuned to Radio Mini 88.3 FM, 20 minutes past 8 o'clock. Welcome to Money Matters Tuesday with Mr. Wahome. I told you that today we are pressing that pause button to reflect and to look how far we are in terms of our finances. That is exactly what we're doing today. And that is why Mr. Wahome is joining me in studio right now. A very good morning to you, Mr. Wahome.
Good morning, Brahma.
Long time. How have you been?
It's been a while. I've been very well.
Yes.
A bit of travel here and there. Going to see our cousins in Kampala and the other ones in Ngari. And I'm happy back.
Good.
But I'm also happy you've done a great job at the Messiah conference.
Thank you.
That was excellent work. Yes, you kept us there. We got to know what was happening. We followed the discourse. And we are very happy about that.
All right.
Just
Thank you.
Now we have to deal with the cold.
Exactly. That is not the problem.
And I think yesterday was the climax. We have to look for always to stay safe.
Yeah.
And the joke in town is Al Karau happened, and there are lessons we are learning from Al Karau.
Yes.
But this is half the year is gone.
Yeah.
The government budget year has started. I know schools are just about to close for this term. And I've seen the university admissions are happening.
Sure.
And that is why it is a good time to do a mid-year financial checkup so that we can see where are we. At the Personal Finance Academy, we continue doing the work we do, the financial literacy programs, the education programs. And I must report, I am delighted. The feedback I got, I've been getting from the people, the people who've been totally down in debt, and how they can say, I have a handle on my debt. I know how to deal with debt. I met a parent who said, you helped me a lot. We have planned our children's education.
Yeah. And
university will not be a big issue. I know the president has said he's paying everything, but we are telling people plan. You never know.
Yeah.
You never know. If capitation is a problem, we cannot trust university not to be a problem. I met people who said, retirement has not become a big deal now. I have been able to see what to do so that I can prepare for retirement. There are people who talk about their business and they say, you helped us to restructure our business finances, our succession. And then there are many people who are saying we have harmony at home because maybe they came together as a couple, they listen in as a couple. And it's a good thing when people live the life they want and they have that comfort. And I've had a couple of financial advisors who've gone through the program. We're doing a program, I think, with Britam at the moment, and they're saying we feel more confident even when we go to our clients. And some people say, how do we join these programs? And I always say, at the academy, we are very open, we are very democratic. We're starting a new class in August, and we have a taste of what will come in August tonight. If somebody is interested, you actually want to know how to invest in real estate, anything in real estate, that's a discussion we have today. And you can always get a slot. It is on 0708 150 137. You book yourself. It's online, it's on Zoom, starting 7, and you can get a chance on that. So I think that makes it easier for us to start the discussion today. It is media.
Yeah.
And the best thing we can do is to do a financial pit stop, or what we call a checkup, a review. In the motorsports or generally in the motor industry, the checkpoint is always a very popular term.
Yeah.
They're running, then they get to a place, and many people are waiting, and everybody is checking, are the wheels okay, is the oil there? And that is a place where we test the functionality of the car. Is the car functioning properly? And for the ordinary motorists, for you and me, we must over time, we must be able to go and see this is the time for service, what we call the engine service, and you check, are the oils in place, are the filters in place, are my brakes working, all those things. And since we do those with our car, we've seen those people in business. If you're a business person, you have to do something called stock taking. You want to see what assets do you have, how many items of these, what is moving, what is not moving. And that's why we are asking, what about at a personal level in terms of personal finances? Isn't it a good thing to actually go to that pit stop and actually check the functionality of our finances? Are they working well? And July is a good time to do that because it is the first month of the second part of the year.
Yeah.
And sometimes maybe that's why it's called, so that we are shaken to think about it. I had a boss many years back
Yes.
who actually used to say that when it is cold, the brains work better. And he would always lower the temperature in meeting rooms to 18. And when you're shivering, you want to think quickly so that you get out. Very, very interesting. So this gives us a chance so that we can take stock of our personal financial affairs. And we set up the year at the start. A lot of people have New Year resolution, they have New Year goals. And it's always good to say, this is where I started. And you want to see, have I achieved? What have I achieved on these items? Where do I need to slow down? Where do I need to accelerate? You might find in your expenses, you need to slow down. In your investments, you want to accelerate.
Yeah.
And there are places where you just want to keep the pace. Maybe the way you're allocating the money, you need to keep the pace. So we want to have our thoughts around that. And we sort of got 6 areas which will help us as we think about what they call the physical health. I was talking to a team not too long ago. We were looking, I think this was HR managers, and we were discussing financial hygiene. And they found the topic very interesting. And I said, we all know hygiene.
Yeah.
That's why we cut nails, we wash hands, and all the things we do. But we can also have financial and hygiene. When you do things that are not right, you will have issues around that. So when you look at these 6 areas we're going to look at incomes, we'll look at expenses. It's good to look at the contingency fund. Then we look at our investments. We also want to look at taxes. Are we paying the taxes? And we look at our insurance. Then we look at our debts. And I think once we have looked at those 6 areas, we will be in a position to say, I am doing well or I am not doing well.
Yeah.
So let's look at them one at a time. When the year starts, there are people who feel my income is not good enough. And the question is there something I can be able to do to increase my income? And we always say there are always many things that we can be able to do to increase our income. So we are now looking at it and saying, at the start of the year, whether it is a salary or commission or fees or whatever, where was I? Is it increasing? Is it reducing? Because there's somebody who said, well, I'll work to see whether I can get a promotion, or I'll even look for another job. There's somebody who said, okay, this business is doing well, but I want to open another business. There's somebody who said, me, I will start a side hustle. I think there are all those things around. Did we increase? Did we do those things that we said we were going to do? And so we are saying, have you done what it is to increase? First, has it increased? Is it constant? Has it reduced? Because sometimes it can reduce. I was talking to those HR managers who are from the from the NGO sector. And the NGO world is a new term. Trump happened. Yeah. And Trump happened literally is a big word for saying people lost jobs. Lost job is income reduction. Where Trump doesn't happen, Ikomba happens.
Exactly.
We have seen those things happen, so people lost their jobs. So it is good to see, have you increased your active income? Active income is what you earn yourself. And you're saying, have I increased? Is my salary gone up? Is my commission gone up? Is my fees gone up? All those monies that are. But on the other side, it is good to say, have I increased my passive income? We looked at our investments and said, I'll structure my investments differently so I can be able to get some income. So we're saying, have you gotten more profit? Are you getting more rent, or are you getting rent you're not getting? What about the dividends you're getting? What about the bonuses, the incentives, the capital gains? So that now we want to use the next half of the year to actually say, if I wanted an increase, it didn't happen. What do I focus on so that I can get that increase? And we always say, be honest. One of the things we know about our income, it is getting worn out by inflation. Yeah. And inflation is around, 6 point something, 6.7%. So our income is getting worn out by inflation. So it is important to consider how to increase the income. And I know that's a whole topic we do in the masterclass, looking at many different ways of increasing the income. But it is important. The top line is always important, because if the top line is thin, the other things don't fall in place quickly. Yeah. So that's the first area. And I think that's an easier thing to check. If all I'm having is my pay, all I have is my pay. Yeah. The question we are saying, do you have another income? Because we have looked at many different ways of having another income. The second area is about expenses. And this is very, very important. This is where we talked about capturing our expenses on a daily basis. So the question is, are you capturing it on a daily basis? At the end of the year, do you do an analysis to see how the expenses are going? Do you keep a budget? It's good to see for the last 6 months. Have you been keeping a budget? Do you do a detailed analysis at the end of the month, category-wise? How much am I spending in entertainment? How much is going to school fees? How much is giving? How much is food? How much is clothing? All those, how much is schooling? All those things you want to be sure how much is going in there. Because that's what we say. That will help us now to say, how do I do smart living? And we said smart living is just all about decreasing your expenses, but maintaining your standard of living. And that's why we had very many practices in here, what we call smart living concept. We said this is why we need to maybe work with a shopping list. We want to compare prices before we buy stuff. This is what we need to do to stay away from impulse buying. This is where you start looking at your personal habits, your money habits. Are you buying things you hadn't thought about? Yeah. Are you getting pushed by the people around you? You know what we call other people's opinion? Are you suffering from FOMO? How many things have you done because other people look like they are looking at you and you want you to do this? Because that tells you how your expenses are going. Because there are many more ways we can be able to do to reduce our expenses. And when times are hard, fuel prices have actually gone up, I think, in this first half year. We have to look for how to compensate. And this is where you find people have learned different things to do. Making sure that you have that shopping list is a good thing. Identifying what habits get you to be wasteful. Maybe when we sit with friends, you're the one who grabs the bill all the time. And then Gen Zs have taught us something interesting if you sat with them. When the bill comes, you don't grab the bill.
Yes.
It goes around. And everybody marks what they have consumed, and they pay what they have consumed. It is very democratic. It is very, very equal. So we are not pushing just one person. And when we're saying at a personal level, it's good to say, I have these tariffs I keep paying, I have Showmax and Netflix and all those things. Am I using them or not using them? Am I paying for things? Sometimes, people belong to the gym, but you never go to the gym. So what are you paying for? You may belong to the members club. There's something called a minimum spend, and you're not spending. So this is the time to be able to look at, am I being a good steward? We've been asked to become good stewards, and this is the starting point. We have to find out, am I being a good steward? If this was family resources, and they sat me down, you see the way they call governors in the Senate, and they sit them down. Would you be comfortable answering the questions, or would you find yourself with questions you're very, very uncomfortable? And before you become like a governor sitting to the Senate, why don't you become yourself and answer to yourself and say to yourself? I always say, I've seen the biggest corporations, whether they are Safaricom, KCB, KQ, every one of them, you're going to say, they have hoods of accountants who actually are very clear where every shilling has come from and where it has gone. So at a personal level, you cannot afford not to know where the money is going. We cannot be hitting half the year, then we're still asking a question, where did my money go? Now, I think we need to be more clear on that so that we take care of our expenses. Taking care of our expenses is not self-denial. We're not saying you stop denying yourself. No. We're saying be smart. Keep your standard of living, but look for ways where you're going to reduce the expenses. And when you capture them, when you do the analysis, you'll be surprised. You'll be able to see, where is this leakage happening, if it is happening, and what can I be able to do about that. This gives us a lot of control, and when you have control on that, you feel in charge. And there's nothing as good as feeling in charge of our money. So that's the second thing we're looking at, other than the expense, because a lot of times we look for more income. But if you're not controlling the expenses, then that's not going to happen. We studied a concept and said, when your income goes up, your expenses go up. And that's normal. So if you're not taking charge of that, you will always be thinking like, I need more. But it's not a function of needing more. It's a question of managing what you have in a better way. So that's the second component that we need to check at this part of the year.
Wow, very interesting. Sorry. Can we proceed to the third one?
Yes.
As we look, as I look at the messages here, because I had posted these on social media. By the way,
let me take the third one.
Yes.
Then we will see the interaction. And thank you, our listener, for always interacting with us. And yes, if you have a question, if you have a comment, you have an observation, we'll always be happy. Now, the third one is the contingency fund. Now, we say this is a safety net in the event of financial emergencies or financial disruption of income. And what we say is nobody is immunized from financial emergencies because they will happen to anybody. And they are not the complicated things we tend to think about. This is not sickness which medical insurance can take about. This is the phone falling and breaking.
Yeah.
And you cannot stay for a day without replacing it. This is about the student whose laptop is not able to work. And then we need to put them back to be able to work. This is the person whose car is broken down and we have to do something about that. This is somebody who's got a relative who's got a financial emergency and we have to go to hospital at midnight. That's what financial emergencies are all about. But you also have disruption of income. And we've talked about disruption of income. When we say Trump happened, when we say Gikomba happened, I don't know that Karao brought disruption of income. But most things tend to bring disruption of income. And we always say you need to have a safety net that if these things happen, if a financial emergency arose, we are able to find the cash to attend to it. Because if you don't have the cash, what are the options? Very expensive credit. And this is where we go to digital lenders. We do not even listen to the cost of money. Whether their interest is 20%, 30%, we don't. We only listen to the fact that the money is available. And this is what, and we're going to see that this is one of the things that has sunk a lot of people into debt. So we need to be able to take care of that. Income disruption. Nobody has the confidence that my income will not be disrupted. In fact, we've seen road expansion. The shops that are on the road have to give way. Sometimes, yes, they'll pay you the money. But before they pay you the money, when you go through the National Land Commission process, it takes much, much longer. Maybe you're not running your business, but they have not paid you. That window, you need to be able to continue your life. And so we said, how much do I need? And I think the discussion has always been, first, you need money that can last you for 1 month. Once you do 1 month, can you work out to have that money that can last you for 3 months? And then finally work what can last you for 6 months. If you want to take it to 1 year, no problem. And we say, we're not saying you have the cash. No. Yes, a small portion of that cash might need to sit in the bank. And you need an ATM for that. Because when an emergency comes at midnight, all the other guys, whether you're talking about money market, whether you're talking about the SACCO emergency, they can't help. People say, I'll use the SACCO emergency. Something happens on Friday evening, SACCO will help you the next week on Wednesday. You have all that time. So that's why we need to put a portion of that there. The balance of the money can sit nicely in a money market fund. Why is it in a money market fund? Because it is going to suffer from two things, inflation and charges. So you need somewhere where it can give you a return. And so you can build it maybe in a fixed deposit, which you can break, in a call account, in a money market fund, in a special fund. We're looking at where it is easily accessible. So we are structuring our investments because if your monthly cost of living is 100,000, and we're saying 6 times, we're saying 600,000, and we're not saying keep 600,000 in the bank, but we're saying in your investments, put it in a way that if you require that 600,000, you can actually get it slowly over time. That's what I'm saying. So it may not be in land. It may not be in shares, because those are, sometimes the prices come down. Land is not very easy to get there. And it's also good to see, qualify what's an emergency. This has been very interesting when I've discussed it with people, because it varies from person to person. And we're saying we want to be so disciplined that this account is only for handling disruptions and emergencies. So it cannot be the place to buy the TV once you see them. You have saved 300,000 and you're now getting tempted to buy the TV, or to buy the fridge, or to buy the seats, or pay school fees. No, that is not what this one is. This is a safety net. You're saying if a bad day came, this is where I would. If you think about government, I think we have a disaster preparedness department, and they even have resources. Yeah, we were told the mattresses we saw in Karao actually came from that department. That people are hit by a disaster.
Yeah.
You see, they need mattresses and brackets and gases so that they can actually be able to leave before they are helped. So those stuff from Karao, that's where they came from. But at a personal level, we need to have that safety net so that we can. So it's good time to say, when I started the year, I said to myself, I need to have an emergency fund, a contingency fund. Where am I now? How far have I gone? But if you're new and you do not know anything about this, you are the candidate we're inviting to the masterclass.
Good.
Yeah.
And remember, the masterclass, new class begins this August, and I hope you are sending your inquiries on 0708-150-137. All right. But in the meantime, I had asked that the very question earlier on, Mr. Wahome, and listen to what Caroline from Kasarani says. Okay. Good morning, Mr. Wahome. Thanks for the tip. Quite a timely conversation. As I review my finances, I realize that I have been working for years, but I have very little to show for it because most of my income goes towards helping family, paying bills, and meeting other people's expectations. At what point should I draw the boundary and prioritize building my own financial security without feeling guilty that I am abandoning those who depend on me?
Okay, that's a good question.
Yeah.
I think I've learned from millennials and Gen Zs. They call it black tax.
Yes.
So what she's saying is she's paying too much black
tax. Yes.
This black tax or this support for others requires personal honesty.
Yeah.
Who are these that I'm supporting? Is it my responsibility to support them? If I do not have an income, what will actually happen to them? Because that's a risk I can hear there. That yes, if there's a disruption in her income, she might not have a fallback position for herself, yet the other people are depending on them.
Yeah.
So, if both of you fall, it's going to be disastrous. So we have to be honest to say to ourselves, who are these? Should I help them to actually, you see, they say what? Don't give people fish. Show them
how to fish.
Is that a possibility for those people? Who are they? Is it a possibility? Can I show them how to fish so that they are all, and they are not completely difficult things. Sometimes somebody comes to you and they say, I want help and I want help. And you actually sit them down and say, okay, so what do you do for a living? I have a young man who came and said, I'm on the farm. And I said, now, if you have a bit more money, what would you do on the farm? He says, I have water, I have a piece of land. What I don't have is a pump to pull the water from the river to the farm. And I said, how much does that cost? And he gave me a number, and I said, okay, instead of you coming to always ask for money, what if we did this? You look for a portion of that money for buying the pump, and I'll give you the balance. You will pay when you get the produce. You see, if you look at it over time, you have given the person the way to fish. Yeah. And eventually they will pay your money, isn't it? But they will never come back. They will be able to go on their way. Because a lot of times, people get very, very dependent, and they lose their ability to actually work for themselves. We have seen this in what we call donor-dependent communities, that people have actually gotten so dependent, like where donors give you food, unga, and beans and stuff. People actually sit the whole day because it's coming tomorrow. So we have to be careful when we are doing something like that. We need to find a way, how do I get this person to do something for themselves? Because you can't carry them for all the time. They have a risk of bringing you down. And when they bring you down, all of you are down, which is not a great thing. That is I don't know if that makes sense for her. And again, if you feel you're not very sure how to go about it, that is where there are experts who can help you out. That's what financial advisory is all about. You can sit with somebody and they can help you to structure. Because you need to be very clear, who are these people? What are their capacities? Why are they dependent on me? Do they have a way of depending on themselves? And we've seen for people who have initiative, once you help them just a bit, they're able to do the balance of the work on their own.
Exactly, and I agree with you in totality, Mr. Wahome. A very good morning to you, Bram and Mr. Wahome. When I look at my financial life, I realize I have been very good at earning and spending, but not necessarily at building wealth. How do I shift from simply surviving from one payday to the next to intentionally creating assets and a financial legacy that that can benefit me and my family years from now? Esther from Ruai.
Thank you, Esther. I think you have a good realization. You're actually earning the money. You're living now, but we must always make a good foundation so that we live tomorrow. And that's why shortly we're just going to discuss about investments.
All right. Good. We can proceed, Mr.
Okay,
Wahome.
we can proceed, yes. For people like Esther from Roy,
Yes.
we are saying, let's also give our money an opportunity to go and work for us. So that sometimes when we are down, and life is, we will find ourselves down because life happens.
Yeah.
You know, you're down because there's a code. You're down because the business got into trouble. You're down because Trump happened. Let the money go out and work for us. And when you're saying when the money go out and work for us, it's not complicated things. We start with small things. Nowadays, we have our phone. And on phone, we have facilities, and I keep saying things like Zidi. Zidi is available on your phone, and it is taking as little as 20 shillings, and you can actually open a small money market fund, and that becomes a foundation for you. It's possible to join, you know, a chama, where you have other people like-minded like you. You can go into the 52-week savers challenge. You can go into the circle. So there are very, very many ways that you can actually be able to go in. And all you need to do, I think we are all creatures of habit. If you took out 2,000 or 5,000 from your income and you invested it somewhere, you might miss it for 1 month. But by month 3, you will not even remember you had it.
Yeah.
And that becomes very, very natural for us. And so that's why we have to find a way of doing investment, and it doesn't have to be complicated. We are not saying you go and buy shares if that's not where you are. We're not saying you go into a special fund and all those big things. No. You start where you are, and you start little in the areas that you understand, in the environment where you are. So that now, you started at the new year and you had scheduled out what you are doing. So the question you're asking today is my investments growing or is it declining? Whether you're looking at your shares portfolio, whether you're looking at your real estate, whether you're looking at your chama, is it growing or is it declining? Is it diversified? If you looked at where have you invested, which areas are you in? Diversification means you might be at least in 3 or 4 areas. You can't be in the circle alone.
Yeah.
Because I've seen a few people who are all in the circle. All the money goes to the circle. What if it is mismanaged? And we have seen, was it Cusco?
Yeah.
What if it is mismanaged? That is where, yes, a portion will have to be there. I've seen when we have had fires in Toi or Gikomba, people say we lost everything. And we always say, take a portion and put it somewhere else. Maybe talk to your insurance company or your fund manager. Take a portion to their side so that you diversify. Look at the diversification. Am I in 4 or 5 areas where I have some shares here, I have some real estate here, I have a money market fund here. So that is diversifying. Diversifying is to secure yourself. Just in case something happens wrong on one, it doesn't happen wrong on everything. This last year, two groups of investors have not done well. Forex traders and cryptocurrency.
Yeah.
Those ones have not done well. So if that's where all your investments are, then you know you have a big damper. But if you had diversified, surprisingly, circles have done well. Shares on the Nairobi Securities Exchange have done well. So if you diversify, you're able to be able to get that. And that's why we look for some investments in what we call low risk stable returns. So you have some investments that you've actually put maybe in your money market fund. You have some investments that you have put in something called REITs, and we're going to talk about REITs this evening. You can be in real estate without necessarily building. And so when you see all these student hostels, the Kwetu, the Kijani, there's a way you can invest in those hostels. They will manage and you get your money out of it. So it is important to look at that. If you've been able to lend to the government in the bonds, that's a good place. But it's also good to go into the high-risk areas. You try. The people who've been in the shares market, whether you're directly there, whether you've gone into an equity fund, whether you've gone into a special social fund, I think they have fairly done well. And so it is always good to look at the balance. Am I in those low-risk funds? Is it doing well in the high-risk fund? Okay, and are your investments related to your financial goals? When you got into the investment, what were you looking for? Prepare for your retirement, prepare for your child's college fee, prepare for your holiday. That's what we are looking at our investment. We cannot deny our money an opportunity to work. So we need to give it an opportunity. And it doesn't matter how little the money is, it works. Even a shilling starts doing some work.
Yeah.
If you can give it 10, you will make it easier for it. If you make it 100, it gets easier. But you cannot be investing 10,000 if you cannot invest 1,000.
Yeah,
that's the way it works.
Yeah.
So that's one area we need to look at and say, do I need to change? Have I heard about a new environment and I didn't know? Because what you just need is information. Sometimes you hear investments, we jump in without understanding, then we ban. I think early this year, people banned in a cryptocurrency because they just wait. You see people are telling you they are seated at home making money. Hey, be careful, be careful. My Bible is very clear. It says you need your sweat.
Yeah.
So if you can't see where your sweat is coming in, be careful, be careful. You're going to lose in money there. So that's another area that we need to check at this point of the year. So we can actually say, this is where I wanted to be. I wanted to have a fund of this much. I am here. How much more can I be able to do so that I have more at the end of the year? So that's an important area.
Okay.
The other area is about taxes.
Yeah.
Now, they say as long as you live, you have two certainties, death and taxes.
And taxes.
Now, let's forget about death. Let's think taxes. The first question is, did you file in time? Because it's important to file in time.
Yeah.
In fact, next year, there's changes.
Exactly.
If you're nil filer, end of the year. Okay. If you're personal filer, you're not nil, but you're filing, it is, I think this is what? This is April?
Yes.
Yes. And then companies will be filing in June. So if you're not a company, remember now June does not apply for you. The other question is, government has given you a lot of tax incentives, tax rebates. I don't know that you're taking tax rebates. I say, if you're contributing to your pension scheme, you know, and you up to a 30,000 shillings contribution, you have a rebate on that money. That money will not be taxed. And so you need to find a way of claiming. And if you don't know how to claim, you need to look for a financial advisor.
Yeah.
If you bought an insurance contract that's over 10 years, you have a rebate that you can actually claim in that. If it's somebody who is living with disability, they have a rebate that they can actually get from their income. If you're looking at somebody who wants to prepare to take a mortgage and you want to do savings so that you can raise the deposit, there's a system of giving you a rebate on that. So the question is, are you taking any of your rebates in insurance premiums, in your mortgage interest, in your pension contribution, in your home ownership savings? Which of these are you? And if you're not, why are you not doing it? Who is filing your taxes? You might need to change him because maybe they are not even aware. If they are not aware, they are not helping you. Use a certified accountant. Those ones will be able to help you. So that we complaining we're paying so much tax, but when we are given a chance for rebate, we don't take it. So it is a good time to take it. Reduce your taxes. The money you have saved from your taxation, you can actually invest that money because it is important money that we can be able to invest. So taxes is the other area that we need to be able to see and see, have we done some good work on that area? Yeah. So you're saying to yourself, did I file in time? Am I taking advantage? Am I claiming what I need to claim? How does my tax situation is? Do you have tax arrears? You know, because sometimes, you know, you do things and you ask for tax clearance certificate.
Yeah.
Are you able to get your tax clearance certificate? And as you're looking at taxes, it's also good to bring in things like rand rates and rand rent. Have you paid your rand rates where they're due? Have you paid your rand rate where they're due? Have you actually paid your, if you're being licensed, have you renewed your licenses? If you're operating a business, have you paid Kajo their license? Because it all falls in that category of taxation. So very, very important to look at that. The other aspect we want to look at is something to do with insurance.
Yeah.
And you're saying, how is your personal risk management shield? Have you thought about the risks that you're exposed to, and what have you done about those risks? Like medical insurance. And when I say medical insurance, I know some people will say, oh no, my employer does that, which is good. If you have children above 21, you just need to be sure, are they insured under your employer scheme? Now, if they're in college, there's a chance they're insured. If they are outside college, or they're above 25, they may not be insured. So you need to be sure about that, because healthcare is one of those places where just a small accident or something like that can give you a huge setback.
Yeah.
And so that's why we need to be sure about that. Did you need personal accident insurance for what you do? Is that a possibility? If you have young children, have you ever thought about life insurance? How is your life insurance operating? Have you insured the house? You know, the house where you live in. Haven't we seen floods and lightning and stuff like that?
Yeah.
What about your car? What insurance are you on in your car? Is it working here? And who guides you? Are they giving you the right guidance? As you're doing that, there's a lot of other risk management things that we need to do. You planted good trees. Have you looked at those trees? Is there a risk they can fall on your neighbor's roof? You know, or the roots can actually go and encroach. You love your pet dog or your guard dog. Have you housed it well? Is it getting vaccinated? Do you have a vet for that work? Because if it did bite somebody, we're going to have serious problems around that. So as we go into the second half of the year, we're saying, how are my insurance seated? A prayer to God is good, but also taking care of these insurances is an important thing.
Yeah.
And the last thing we want to look at is the debt. And you should never feel bad that you have debt. Debt is not a sin.
Yeah.
In fact, you check with all the rich people, wherever you're going to see them, and they have debts. Okay? So, is your debt portfolio increasing or decreasing? We remember when we started the year, what did we say? We said write them down. And maybe this is the time we go back and write them down. Every debt has a name. Every debt has the amount that is outstanding. The interest rate they are charging you, when you come to the interest rate, please convert them into percentage, annual percentage.
Yeah.
And then you have got the facilities on your phone to help you that. Because sometimes, people tell me, oh, Fuliza is 1%, but I say 1% per day. Okay. If you annualize, what is it going to be? Because that's what gives you a proper reflection.
Yeah.
And sometimes when they do those numbers, people keep wondering, why do we borrow here instead of borrowing the SACCO? The SACCO, the maximum it will go is 13 point something percent. Most of these other blenders, it is always above 50%. So we need to be able to do that. So keep a stock and say, for each of these debts I have, how much pressure is it exerting on me? Because if it is exerting a lot of pressure on you, it's giving you trouble. And you need to be able to think about, how do you deal with that? What are the consequences if I don't get this debt paid? If you borrowed a loan, you bought a car, and you're not paying, the bank will come for it. Nowadays, you've got a system. They stole it, wherever it is. Oh, that phone, you remember from that guy who sells us phones, tunalipa mdogo mdogo. If you don't pay when it is due, the phone just goes quiet.
Exactly.
And I think they do this also, do the same. You have your mteja, but the thing cannot go on again. So it is important for us to be able to look at, where are we? Is my debt portfolio increasing or is it decreasing? And there's nothing wrong with it increasing or decreasing. It's just a question of what is the plan. And sometimes I say to people, when you're looking at your debts, are they good debts or are they bad debts?
Bad debts, yeah.
What are bad debts? The ones you are not able to pay. The interest rate is very high. The things you did with them, in fact, if you look, you can't see. By the time you paid the money, you could not see what you are paying for. Like if you go to a restaurant and we have a meal, then I fully and pay. I can't see what I paid for.
Exactly.
This is gone, isn't it? We are looking at those debts where there's even no arrangement. If you're not able to pay, what will happen? The good debts are all the ones that give you value. They make your financial future better. Maybe it was an appreciating asset. Maybe it was going to give you the ability to do more. You have stock in the shop and you get a loan from the bank and you expand your stock. You had one branch, you're able to open another branch. You had 2 cows, you're able to buy 5 cows. This is what we're calling the good debt. And those ones normally don't pressurize you a lot, and they always have a mechanism of how you can be able to do. So, of course, the other one is you have to find out, am I building my debt capacity? These last few days, I've talked to people about something called social capital, and people know social capital. But social capital in a financial terms in the debt environment is a simple question. If I needed 50,000 shillings last night, urgently, do I have 5 people I would call and they bail me out? If I don't have 5 people who I can call and they bail me out, then I don't have social capital. Because the option I'll have is to go for very expensive debt or to mortgage something. So that's why we have to start thinking, how do I live Do I have people who I can depend on? Is there anybody who can depend on me? That if they call me at night, I will not give them stories. I'll tell them, okay, mi nitakusaidia na 20. Where hizo zingine, tafuta. By the time they call the fourth person, the 50 is available, they do what they do. Yeah. So that's the question of social capital. It's good to ask ourselves, do I have social capital? If the need be, whether it is 50 or 100, how many people would I call? And they will not have 1,000 questions because they know I am credible. My word is my bond. So they can, and it's a good way of living because that's how we avoid the shyrock. That's how we avoid all these very, very expensive debts as we do. And as we do that, it's always good to build our capacity for debt. Yeah. We always say earn more, save more, borrow more. So don't just put the minimum. Join the SACCO, yes, but don't just put the minimum in the SACCO because the SACCO will lend you as a function of your savings. Yeah. In the Chama where you are, the lending that you guys have is a function of how much contribution you do. So the more contribution you do, the more you create your potential. Have a good relationship with your bank. The day you want to go for asset financing, your bank manager wants to see, oh, you put money in and you put money out. So there must be good flow of money in and out of your account, because that's how you're going to benefit from that. Like we said, we have not seen a rich man who never used somebody's money. So it is good to always ask ourselves, are we using other people's money? There are people who are very debt shy. And that's why I say, you come to the masterclass. Last week I was talking about using a mortgage. And a lot of people saying, no, that's a bad way. I said, okay, let's consider it. And what's the biggest risk if I'm not able to pay? And I said, if you're not able to pay rent, what actually happens? They throw you on the street. You're better off with their house, because if it's sold, you will still get something out of it. Exactly. So I think those are 5 areas we can be able to look at. So we have said about our debt portfolio, our insurances, our taxes, our investments, our contingency fund, our expenses, and our income. If you look at that, you can tell where you are the second half of the year. And then you can tell yourself, what do you do for the balance of the year? So you want to build a strong financial house, and this requires you have some financial intelligence. You know, your ability to engage with money with confidence. And that's what financial literacy does. It helps you to have that courage. And so you're welcome to join the Wealth Creation Masterclass. Like I said, we have a new intake starting in August. But tonight we actually have a class session. So if you want to come tonight, and we are going to discuss real estate, you will have a free session. It's online. It is on Zoom. And we're going to discuss all the options in real estate, including how you can be a landlord without having to own the land, because that's a possibility. So if you want a chance, 0708 150-137, and we'll be happy to see you at that moment. Now I'm sure you're going to take a media review, the pitch talk, and then you're going to shed you out for the balance of the year.
Exactly. Thank you. Thank you so much, Mr. Wahome. Quite a timely conversation here. My dear listener, over to you. Make sure you get yourself a slot for today's class, 0708-150-137. Send a text on that number. And also, request on how you can get the Wallet Words, a book that has been authored by Mr. Wahome himself. All these things are there. 0708-150-137. Thank you so much, Mr. Wahome.
Thank you. Have a blessed week.
Thank you. You too. My dear listener, up next,
this is Radio
the final hour. Don't go too far.
You are listening to Radio Omini, the Catholic radio for all.